here we have the economic calendar. Now, if you don't know what the economic calendar is, I have a free YouTube video that you can watch on it. But if you just go to forexfactory.com, make an account and then go to the calendar section and then copy these settings here, right? And then click apply filter, you'll be right where you need to be. So coming into every single week, we always look at the economic calendar because it is our roadmap for how we could conduct the week and understanding which days are likely to be good, which days are likely to be bad, which days of the week are likely to be the high or low of the week, so on and so forth. We can gauge that simply from this right here. So, we can even look at next week. Okay, which days of the week are going to be good, which days of the week are going to be bad, the week after that. So everything is on a time-based schedule via the economic calendar. And these red news folders here, all this is is just volatility, right? That's all it is. And areas of price or areas of time where there is more volatility, that tends to create the signatures that we look for, right? Which we'll talk about a little bit later on this month. But in short, looking at Monday, we can see Monday has already passed. There was a red news folder. All right, Tuesday, we do not have a red news folder. So Tuesday, is there going to be, or is there likely to be a high level of volatility in the market, right? Are we expecting volatility tomorrow? Just based off the information that I've told you. No, exactly. Because it lacks a red news folder. Now, Wednesday, would we expect volatility to come about Wednesday? Yes or no? Yes. So would Wednesday be a good trading day or an intraday trading day? Yes, because we know there is expected volatility. And Wednesday, we'll do our tape reading, right? Thursday, we have 8:30 unemployment claims, which the Thursday before non-farm payroll, right? We have non-farm payroll here. Typically, the Thursday before non-farm payroll is low probability altogether. So, if there were trading days that I would skip this week in terms of intraday, it'd likely be Tuesday and Thursday. And then Friday, we have non-farm payroll, right? The infamous non-farm payroll. So we can expect a lot of volatility to form on Friday. Now, typically whenever you have non-farm payroll week, the high or low of the week is always on either Thursday or Friday. So, keep that in mind. I'll say it again. Whenever you have non-farm payroll week in the economic calendar, so whenever you have non-farm employment change right here, you can always expect the high or low of the week to fall on a Thursday or a Friday. So now, looking at the chart, we have the S&P 500 on the left and the NASDAQ on the right. So coming into any trading week, you always want to understand and have an idea of where we're sitting at in the context of the higher time frame. So taking a look on the right on the NASDAQ, we can see we have this high here that we have outlined, and we have this low here that we have outlined. So the NASDAQ is currently trading, within the consolidation. So we're within the bounds of this high right here and this low right here. Now, why am I picking this high and this low? Well, this is the most extreme high and the most extreme low on a higher time frame chart. So this is, would be quote unquote our anchor for the higher time frame context. Now, if we look at the S&P 500, we have that same high. We also had that same low. Now, another thing to add on to the higher time frame is you always want to focus on the larger liquidity pools, right? So what does that mean? Well, if we take a look, obviously this is a higher time frame liquidity pool, right? It's right now, all-time highs for the Nasdaq and the S&P. But what else is here that we could use for navigating this week in particular? Well, if we take a closer look, we have this high here, this low here, this low here on the S&P. And on the Nasdaq, we have this high here, this low, this high, and this low, right? All of these are the important liquidity pools. So how do you know when a liquidity pool is important? Well, number one, higher time frame chart. And number two, it's an old swing point that's been left out in time, right? The most common mistake I see with liquidity is where people will, take just random candles and then call this, something like this here, liquidity. Like take something like this and, call it liquidity. But the true liquidity is found at the extreme highs and the extreme lows, right? And if we look at a smaller time frame range, simplify it, we can see, yes, this is our higher time frame, way out there in time, but there are also important liquidity pools that's closer to where price is currently trading at. So once you've identified, the clear liquidity areas, now it just becomes a matter of, okay, is the market likely to draw to the buy side liquidity, or is it likely to draw to the sell side liquidity, right? And you're doing this just on a higher time frame chart, right? You don't have to look at anything on the lower time frame. You don't have to look for any Kraken correlations. The first step in understanding, where price is trying to get to, or just navigating and understanding how it's going to get to where it wants to get to on the higher time frame, is understanding, the liquidity points. Will price have more of a willingness to try to get here or try to go down here? Right? That's the question that needs to be answered. Now, if we zoom out, again, we can see on the S&P 500, observing where price is, where is it closer to? Is it closer to these highs right here? Or is it closer to, these lows down here? And this is the part where you answer. The highs. Exactly. So we're not even looking at any Kraken correlations, right? I know some of you probably watched the leak stuff. Some of you have, already gone down the rabbit hole of quarterly theory and all that, but we're starting now from the bare bones, because whenever you watch leaks and whenever you watch content that, you're not really supposed to be seeing, things tend to get scattered and it causes a lot of confusion. So we're going to start from the very bare bones, which is what this is right now, just looking at the important liquidity points, and then throughout this year show how you can apply, the advanced things to this. But it all starts with this right here. But going back to the highs, right, just observing the S&P 500, seeing of how it's closer to these highs right here, what can we gauge on price? Is it likely to draw to the highs or likely to draw to the lows? The highs. Exactly. So for the rest of the week, right, until something else tips its hand, until something else shows itself, where would we expect price to draw to? These highs right here. So this high on the Nasdaq, this high on the S&P 500, but particularly the S&P 500. So why would we focus more on the S&P than the Nasdaq? Who wants to take a guess? Because it's closer, exactly. And if an asset is closer to a particular liquidity pool, right? Remember, this is the same quote-unquote timed high on both the Nasdaq and the S&P, but the S&P is closer. So what does that tell it, or tell us about the S&P? It's stronger. it has more strength to the upside. It's showing more of a willingness to want to draw to this high. Exactly. Now, we're going to look at a 1 hour chart. So here we have this horizontal line right here. This marks the opening price of Sunday, and everything to the right of this line currently is all of the information we have in regards to the week, right? So this is pretty much everything we have in understanding how the week is likely to play out. Now, what can we see just based off this information here? Monday expansion profile. We'll go into that at a later time. A crack in correlation. Exactly. It's the answer I wanted to see. So keep in mind what we said about the S&P, right? Is the S&P 500 stronger than the NASDAQ right now? Yes or no? Stronger to the upside? Yes. Now, looking at a lower time frame chart, right, we can see the S&P 500 traded higher, but alongside trading higher, what did it do? It took out a high from the previous week, right? Everything to the left of this horizontal line right here, or not horizontal line, excuse me, vertical line. I think I've been calling this a horizontal line the entire time. Vertical line. Everything to the left of this vertical line is within the previous week. Everything to the right of this horizontal line, I keep on calling it a horizontal, vertical line, is within the current week. All right, so we can see with the S&P 500 trading higher, it also took out a high from the previous week. But on the NASDAQ, with the NASDAQ trading higher, what happened? Did it take out this high? No, it didn't. So this is a crack in correlation that is bearish. But wait a second. You just said that price is more than likely going to want to draw towards the high, but you're showing us a bearish crack in correlation. Yes. So you're understanding how to filter cracking correlations from dissecting the higher time frame then going into a lower time frame. So would we expect this here cracking correlation to hold? Would we want to see this, cause the market to drop lower and then trade below this low? No. Because is the higher time frame agreeing with that? No. Now, the only way this would hold is if what? The S&P 500, or the NASDAQ, either one, traded above this high right here and then created another cracking correlation. So there would be, two cracking correlations simultaneously happening. If that were to be the case, then yes, price could drop and then go under and go for the, this low right here. But until that happens, what do we expect to happen in price? Go up, higher. Exactly. So we are ignoring this SMT right here. Completely ignoring it, right? We don't care about it. Unless it gets confirmed, right? Unless a new cracking correlation happens within the current week, which that's important. Right? Write that down. If that happens, then we'll be concerned. But if it doesn't, and the S&P 500 takes out this high, and the NASDAQ takes out this high here, then, we're smooth sailing for price to likely just, trade higher and higher, going towards our important liquidity pools. So coming in tomorrow, if you were to trade tomorrow, specifically at 9:30, you might see something happen, and within the morning session, see price gravitate higher. How do you confirm a Kraken correlation? Only one SMT at key level. You confirm a Kraken correlation from a second stage. So we're getting a little bit into the advanced thing. So if you're newer, don't worry. All of this is going to be talked about again. All right, you'll understand all of this. But if price were to trade higher and the S&P 500 were to take this high while the Nasdaq creates another feather swing, that would be a second stage Kraken correlation. So that would be confirmed, which is why I mentioned earlier that if that happens, then price will be ready to drop lower. But until that happens, we will expect higher. And another thing I forgot to mention at the beginning of the live stream, something I wish I would have done for the 2025 people, especially those in January, is write down in a notebook or your trading journal, write down where you currently are. Whether you've been doing this for 3 months, 8 months, a year, 2 years, 3 years, 5 years, just write down where you are, right? What are your strengths? What are your weaknesses? What are you afraid of in the market? What's the very thing that keeps you from wanting to click the button? Whenever you see everything that's supposed to be there in the chart, right? Write all that stuff down. Now, what confuses you the most? What's the common theme and the common characteristic between all of your losses, right? Write all of this stuff down. And then, however long you choose to stay with me, look at that notebook again. Right? That's one thing I want all of you to do. That's something I wish I would have told the 2025 people. Is this what you meant by higher time frame liquidity? Sequential SMT? Yes, exactly. Higher time frame liquidity is more important than sequential SMT. The higher time frame liquidity is just the destination. The sequential SMT is the bus. That's how you get there. Why do you not look at the Dow? We'll incorporate the Dow soon. For now, we'll just look at the S&P 500 and the Nasdaq. That's it. I don't want to put too much on the table right now for the very first live stream. But everything in terms of overview and things I wanted to talk about is pretty much over with. So now we can just do some Q&A and then head out. But I'll ask everybody, are we all on the same track? Are we all on the same page so far? Does everything make sense? And for the newer people in here, you can speak your mind. You can be free. Right? No one is judgmental about here. We've literally talked about losses, blown accounts, right? We're open here. There's no shame. If you make a mistake in your trading, if you ever have a question about anything in particular, right? We're all a community here. Since this is a monthly, open for new apps every quarter, how long until someone who joined will know your full framework? It takes about, after all of the core content was said and done in 2025, it took the average person about 3 to 5 months for the people that joined in Q3 and Q4, it took about 3 to 5 months for them to have, a grasp, a real good understanding of what they were doing. Do you have monthly TPD in December? We'll talk about TPDs and all of that later on. That's because I know you release your core concept framework by the week. What did you get for Christmas? My girlfriend got me a pair of shoes. They were these like special Nike Dunks. I don't know the exact ones, but for exactly what they're called. Please tell me how I can just trade a weekly candle, one shot, one kill. Do I need to go on lower time frames like the 15-minute? No, you don't. Which, understanding how to navigate all of that is going to come with time. Right? There's nothing I can say or do that is going to have you walking out here next week, catching the higher low of the week, and then holding that throughout the entire duration of the week. All of that will come through by means of experience and seeing it outlined ahead of time over and over and over and over again. Everybody here that you see doing that, or the people within here that you've seen on social media that you see doing that, it took them a great deal of time to get to that point. Right, one of them sitting in here right now, Mr. Q1. Q1 fake SMT, talking about you. Right, it took him a while to get to that point, but now that he's here, the world is his oyster. But in the beginning, you're going to be confused. But through time, it all the pieces will come together. Is this only what you use coming into each week? Check which higher time frame liquidity we're closer to. Wait for Kraken correlation in the current week to confirm it. Yes, that is the base solid foundation, right? But in the future, you're going to learn when you don't even need a Kraken correlation. But most important thing, higher time frame liquidity. How many one-on-one calls are there per month? Preferably 1 to 2, right? Since there's so many of you. But technically, as many as you want. But to be courteous of other people, so everybody can have a chance, 1 to 2. It's possible to give us access to the past year core content to understand easier how you approach execution, help us level up faster. Personally struggle with timing my executions despite having a good narrative. Like I said before, the only people that have access to last year are the people that were here last year. Do you trade multiple markets a week, or do you focus on one for the week? My main focus always is index futures. Right, this is my bread and butter right here. If I had one thing to use, for the rest of my life, it would be just these two charts that you're seeing right here. But sometimes I trade Forex, depending on what it shows. And that's about it. Just Forex and futures. Index futures, specifically. Do you use COT or seasonality on bar chart to know open interest? No, I don't use COT data. In my opinion, it's pretty much the same thing as a volume indicator, and volume is not moving these markets. Seasonality can be of use. But what's currently happening in price has to align with the seasonality for it to work. Would a day trader gain as much value here than a swing trader? Yes, because I'm going to talk about things this year that I didn't talk about last year, and it's pretty much only for the day traders. And it's like a cheat code to know what's going to happen at 9:30. But right now, we're talking more so about the higher time frame, because if you don't have a good base and a good understanding of what's happening, overall in the market, then intraday you're just going to be blown through the wind, seeing whatever happens. Right? Once you have that higher time frame in mind, that's how you know to filter low probability versus high probability, understand what you want to use, how you want to use it, what time of day you want to use it, all of that good stuff. All of it comes from by means of understanding, this. How come you don't trade oil, crypto, commodities, or metals? I do trade crypto, but I hold spot. Like right now, a majority of my holdings are in Ethereum for longs. As Ethereum has been dropping these past few weeks, I've just been buying more and more. And you have a large focus on capturing the weekly range. How do you focus solely on? Do you focus solely on this, or do you have an intraday approach also? I have an intraday approach as well, and you're going to see that, on the tape readings. On the tape readings, I've called, 1 minute gaps, and then that got used for the entire duration of the day as well as the entire duration of the week. All right, and I've done it multiple times, not just once. So yes, you will also get the intraday approach, right, whenever it comes time for looking at the intraday, which 2 days out of the week we do that. Bunch of questions around TPD concept. When can I ask them? You mentioned that we cover it at a later point. I'm going to also, for the Q&A section of the Discord, open up a new one for 2026. So all the questions about other things that we haven't talked about in this live stream, you can go ahead and ask them there. Featured gold, silver, or platinum? No. Especially not right now, with all the manipulation going about in those markets. But the volatility is very high. We'll say that. Day said Bitcoin to 500K. So this isn't, I'm going to go ahead and preface this by saying this isn't slander to anybody. Right? ICT has gotten it wrong before. I've gotten it wrong before. Day's gotten it wrong before, right? We all get it wrong sometimes, right? It is what it is. Why am I bullish higher time frame crypto? Why is Day bearish? He has his reasons. I have my reasons. I don't know exactly why he's bearish. But one thing I will tell you is Day likes to short. He likes to be a short seller. And there have been times in the past where he's called for a bear market and it just didn't happen. Right? He loved that's his personality. Right? He prefers shorts over longs. Right? In majority of his trades, you'll see him shorting. Now, could Bitcoin go to 50,000? And I'm wrong. Absolutely. But I have my reasons. Right? Day has his reasons. Personally, I'm bullish crypto within the next few years. What do you use to buy and hold for long term crypto? You can just use a hot wallet. That's what I use. What are your thoughts on IPTA data ranges? I don't really care about them. The only thing that matters is liquidity, right? So on every X post where you said let the Monday range develop, this means you never ever trade Mondays, or there is a certain criteria for when to trade Monday. And all of that will be talked about for Chronos theory. The complete Chronos theory. Right? Something I dropped hints and bits about last year, but never fully dropped everything for. But Chronos theory is where you take each day of the week, and it has its own unique function. Like pulling the curtains behind the if then paradigm. Use cold wallets if you're holding crypto spot for longer periods. Yeah. The reason why I use a hot wallet is I'm also lending out USDC right now. How far back in time do you consider relevant highs and lows? Do you have a limit, for example, 60-day look back max? All extreme liquidity points are important, right? This is important, this is important. But in terms of the current trading week, what's going to be most important is going to be, the previous week or two, right? That's it. So that's why we talked about this high and this low. Well, now we have this low, this high. So the previous week, that's going to be your most important, right, in terms of the current week. Friday's purpose is to return into the weekly range, yes, but under specific criteria, which we will talk about. What do you think about Trump gaining control over the oil? How will it affect the market? Like I said, I don't trade commodities, but could likely just see more volatility coming about in the oil sector. USDC lending, it's a cheat code. You get a crazy interest rate. Whenever I first started doing it, I got like a 10% interest rate on my USDC. It's crazy. It's gone down a little bit. But a bit off topic, but do you trade options/option spreads? I used to, but I wouldn't recommend it, especially if you're newer into trading. And I've recently talked with somebody that did trade options and showed them funded accounts and how the futures market works and all that. And they had traded options, their entire trading journey, then switched to futures for 2 weeks, and he's loving it. The thing is with options is that you can be right about where price wants to get to, but if it lags behind, then you'll lose. So you have to have speed. The market really has to be in your favor. Right? Whenever you're trading futures, it's if you want the market to go up and it goes down, then you lose money. If you want the market to go up and it goes up, you make money, right? Two outcomes, simple as that. But whenever you're trading options, if you want the market to go up and it goes down, okay, you lose a lot of money. If you want the market to go up and it goes sideways, then you lose money. And if you want the market to go up and it goes up, then you make money, right? So you're adding that extra variable. Is there a way to trade without looking at the economic news calendar? Yes, but I wouldn't recommend it. Are weekly profiles important to you? Very, 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 very important. You forgot. If it goes up, retraces, yeah. If it goes up and retraces, you're in the red. ARK is the one that I talked to about the options. So any questions you have about options, he's your guy. It's the best to wait for 2 stages of sequential SMT before entering. Yes. If I want to trade crypto, what assets should I choose? Bitcoin, Ethereum, and somebody already answered total 3. How come you don't trade multiple markets using the knowledge you have? It would give you more trade opportunities. I don't mean this in a greedy way. I'm saying because, for example, if you trade 4 times per month, by trading multiple markets, you increase that. Yes, you would also increase it, but you'd also open up more of a possibility for mistakes and errors. So each market has its own personality. And once you've been doing this for a while, you'll understand which market you gravitate towards more. Now, the concepts work in every single market, but the S&P 500, it moves its own way. The Nasdaq, it moves its own way. The Dow moves its own way, and Forex is a different ballpark. Commodities, a different ballpark. Each market moves in its own unique way. While yes, the S&P 500 and the Nasdaq generally move in the same direction, the way that they get to the point they're trying to get to is different in their fluctuations. And you'll adapt to a specific market, and you'll become close to that, and that'll become your bread and butter, and be like, you know what, I don't want to do anything else because this is the market here that I like. You won't want to do anything else on top of that. Can we know in advance when news days are going to be choppy and what news days are supposed to be expanding with speed? I'll say JOLTS job openings and consumer confidence. Those days tend to be slow. Solana outlook similar to Ethereum, I'm guessing. Thinking picking more up. Yep. Think about Solana is it's used in a different way than Ethereum. And future trading indices, what kind of size do you encounter slippage on fills? I assume if you ever traded on big size. Well, if you're trading with a regulated futures broker, it's only going to be a tick or two. Unless you're trading 5,000 contracts, maybe even more than that, then you experience a larger slippage. But if you're on a regulated futures broker and you're entering, just a few contracts, your slippage is going to be next to none. Like 100 Nasdaq if you market order it. Well, I've never traded 100 mini contracts, but even then, in the grand scheme of things, it probably wouldn't be much. Now, if you're talking about a MetaTrader, right? If you're talking about MetaTrader and 100 lots on Nasdaq, that's a different story. But yeah, futures solely, even if you traded 100 contracts, whether it be the micro, whether it be the mini, it should still be little to no spread. Do you analyze Ethereum long-term investment yourself, or someone else? Myself. What is CIC? CIC stands for crack in correlation. And in short, a crack in correlation is just whenever 2 or more closely correlated assets do something different. So the S&P 500, took this high here out, whilst the Nasdaq didn't take out this high. So that is a crack in correlation. Can you explain when the Dow is used as an indicator and when it's best to avoid it? we will get on that topic whenever we bring the Dow into the equation. But keep this in mind. The relationship between the S&P 500 and the NASDAQ is more important than the Dow. The Dow has the biggest chance of, doing things on its own. The S&P, if you ever see a cracking correlation solely between the S&P 500 and the NASDAQ, it's higher probability compared to if it were, the NASDAQ and the Dow, or the S&P and the Dow, right? So the S&P 500 and the NASDAQ have a closer relationship. Is there any homework we should give ourselves to study in between now and the next live stream to better prepare ourselves? Study this right here. What I said, just watch. Observe the market with what I've told you. Right? Everything I say is important about what we expect for the market. Right? We expect price to continue higher until proven otherwise. Now, if it creates a cracking correlation specifically at this high here, then, we could see things flipping. The script could be flipped and price could deliver lower. But until that happens, then we'd expect price to, continue trading higher. So just observe, based off what I've said, just observe the market with that context. Right? That's the homework. That is going to be better than, going back and back testing, random highs and lows, because you're seeing something that's live. It's happening in front of you. You have context behind it. Low in the S&P 500 mark out is 6866. Since that is TBD with NASDAQ, do anticipate that to be the liquidity target just based off that for the week. So I'd prefer for this low to remain intact. But anyways, we've been here for 40 minutes already, so probably going to go ahead and wrap things up. So hopefully you all found this one insightful. Any more questions that you guys have, I'm gonna, like I said, gonna open up a new Q&A section, so all will be well. But good luck and enjoy the rest of your night or day or evening, wherever you are in the world.